Message from the mountains this Friday. Leaders across Europe are going to be listening as we all face some painful decisions. Let's talk with Jim Rickards, Senior Managing Director at Tangent Capital Partners. Good morning, Jim.
Morning, Michelle.
You really like gold, right?
I do like gold.
Why?
It's money. I think Warren Buffett has said, gold's a bad investment. I agree with him. It's not an investment. It's not a commodity. It's money. If you like money, you should have some gold.
You believe gold is a currency. You're part of that group that believes that, and that's why gold is higher now. Where do you think gold goes?
Well, ultimately, it'll go to sort of $7,000 an ounce. That's the implied price based on the amount of money supply. It won't get there for several years, and whether it gets there through some kind of presidential commission that studies the return to the gold standard, that's what I would certainly favor. The other way is sort of chaos, where there's sort of sequential collapse of paper currencies, and then you go to gold on a more emergency basis. But either way, you've got to reconcile the price of gold to the money supply, and it's eighth grade math. There's nothing complicated about it. But when you do those ratios, those are the prices you get.
But in the Jim Rickards world, we're heading to either a new gold standard in the United States or ultimate destruction of the European Union.
No, actually, I think the European Union hangs together very well. I'm interested in your remarks in the first hour, Michelle, about Angela Merkel. How can she sort of push markets around? Markets are going to have the last word. I disagree with that completely. She's got an army, navy, air force, jails, prisons, taxing power, the power to nationalize the banks, the power for confiscatory taxation. So she's got all the cards, and why should she play them? I mean, so far she's getting what she wants. Here's her approach to the European problem. It's really a two-step. She has to do two things. They have to get the institutional structure of the ESFS in place.
That's the Emergency Stability Fund for Europe.
A stability facility, right. Yeah. Mm-hmm. The other thing they have to do is increase it very dramatically up to €1 trillion or more. She's got to get it through 17 parliaments. She doesn't want to move the increase until she gets the votes. So at a lower level, she's going to go get the votes from the parliaments. Then once the institution is in place, she can up the ante, but she doesn't have to go back and get all those votes to increase the size of the fund, because the board can do that. So she's saying, look, give me the votes first. When we get it in place, then we'll increase it. Then you've maybe got enough to deal with Italy, certainly enough to sort of calm down the markets. The interesting thing is this is going to take 3 or 4 months to do, and the ECB is your bridge lender in the meantime. Will things fall apart before you get there? I think they'll hang together. This is all, of course, leading up to the G20 in Cannes in November.
Where they'll get lots done, I'm sure. Yeah.
But Jim, just one point on back to gold.
Yep.
Is gold really a currency, or is it just a default currency because the other 3 major currencies, dollar, euro, and yen, are so lousy right now?
Well, I think it's actually I would say it's money, but you can call it a currency. To get a currency, you have to have something backed by gold. So, I think, locally, we'll still have dollars in the United States. We'll still have euros in Europe and yuan in China and so forth. I think that will continue to be the case, but it'll be backed by gold at some level. Or I think what the IMF.
So you think we're going back to the gold standard?
Well, I think it's one possibility. I think what the power elites really want is the SDR standard, which is a basket of currencies. The groundwork's already been laid by the IMF. They had a paper in January giving the complete architecture, who the issuers should be, who the buyers should be, settlement and clearance. If you actually look at the paper, you probably have seen it. There are diagrams showing how you do all this, and then they even recommended 200 billion SDRs per year issuance. So they had an issuance program. So it was a complete blueprint for a global currency.
When was the last time the IMF had a blueprint that finally worked out, Stephen?
Well, they had
a long time, Michelle.
Well, they had a
during the feudal system. But your overall point is, and I like how you approach it. You approach it from a supply perspective. If the world is awash with liquidity, as many of the bulls used to say, but the world's really awash with liquidity of fiat currencies.
Right.
You have to look at the alternative of the fiat currency and then the representative basket changing, whether you think it's gold or SDRs from the IMF. The point is that if you've abused a huge percentage of the total basket, you're going to pay for it and there will be a recipient.
Yeah, that's the point. The SDR is a basket of other currencies,
right,
which are fiat currencies, whose economies are not being managed well. So isn't the SDR just another way of rearranging the deck chairs on the Titanic?
That's a good. Here's the difference. You can issue SDRs. You think QE2 is interesting. The IMF board, the executive committee, can issue SDRs. You can have QE unlimited SDRs by fiat, and there's no accountability. Nobody elects the IMF. Nobody elects the G20. I mean, the individual leaders, some of them are elected, some of them are kings and dictators, but they can just issue they can just issue SDRs to the extent they want. So there's no, Bernanke's sort of in check right now. I agree there's not going to be QE3, but there's nothing. The next time there's a Lehman-style crisis, the bailout will not come from the Fed. It will not come from the ECB. It'll come from the IMF in the form of SDRs, because you can just print as many as you want and pass them around. And Keith,
give me a 20-second answer to this question. Why gold? Why is gold money and not beans or something far
diamonds
or something far more contemporary that has much more value today? Computing power.
Sure. Well, beans are consumed. Oil is consumed. These things are produced, but they're also consumed. Gold is not consumed. It's almost indestructible. You need high explosives or a very short list of very powerful assets to destroy it. So sort of gold is around. It grows at about 1.5% a year, and I realize that productivity and population
the supply
growth
of it, or
the supply of it goes about 1.5% a year, which is mildly deflationary, but it's the good kind of deflation as opposed to the bad kind of deflation. And the growth and stability and price stability from 1870 to 1914 on the classic gold standard is really spectacular. I mean, it's been written about quite extensively.
And you're going to have a book coming out in November called Currency Wars that's going to go through this.
Right, it'll be out November 10th, but it's sort of we'll be doing more publicity on it in the fall. But yeah, it talks about 4 outcomes instead of putting a stake in the ground. It talks about
you know what? Save that for November.
Okay,
Thank you, Jim. Good to have you on. It's really appreciated.